Credit report basics we're going to talk about. Now, this is not my definition of credit, but I like it. I took it from someone else. It says credit, a means of buying something you don't need at a price you can't afford with money you don't have. Think that's a good definition? I think credit cards make you think you have money when you really don't. So, very first thing when it comes to credit repair, I just want you to understand about the credit reporting agencies. You have Experian, Equifax, and TransUnion, 3 major credit reporting agencies. And the only thing that they really do is just maintain your payment history. So you have a company maybe like Sears that will pay money to Experian, Equifax, and TransUnion so that they can get copies of your credit report. So that's why we can get this instant response on whether or not you're going to be approved or rejected, on your credit. All their operations are mandated by federal law. So the Fair Credit Reporting Act mandates everything that these credit reporting agencies do. But keep in mind, they do not grant credit. So you can't contact Experian, Equifax, and TransUnion and say, why did you deny me? Because they did not deny you. You were denied because of information that was kept in your credit file. And just know that all creditors do not have to report to all 3 credit reporting agencies. So you will get your credit report and you'll find there's different information. You might have a major credit card like a MasterCard or Visa, and it will report to all 3. But you may have some place like Macy's that will only report to just one. So that's why all the information in your credit files are going to be different, and you want to make sure that when you're doing credit repair, you get a copy of all 3 of your credit reports. So let's turn to page 2. On page 2, I've got listed the credit reporting agencies, because one of the first things that when you're going to do credit repair, you have to order your credit report. Now, if you have never used the annual credit report request service, you can get a free credit report every 12 months, from Experian, Equifax, or TransUnion. Now, just know this is not your credit score, but just your credit report. Is anyone familiar with the annual credit report request service? Have they gotten their free credit report? Okay, I've got a few people. Good. So you can go to that free annual credit report service. If you're computer literate, go online, you can get that credit report instantly. If you're not, you can go call that phone number, or you can also mail in an application to get your credit report. Now, if you've already gotten your free credit report, then you can go directly to Experian, Equifax, or TransUnion, and I have the numbers there. Now, keep in mind that when you get your credit report, if you're married, husband and wife, you're going to have separate credit files. Always say that if you were in love with that person and they had bad credit, don't worry, because your credit files are going to be separate. The only way they will join is if you get joint accounts. Your personal credit reports, those that you get from Experian, Equifax, or TransUnion, they're only seen by you. No one else sees that information that's in the file. If you've been denied credit, if you're unemployed, or a victim of identity theft, you can get a free credit report. Do I have anyone in here that's been a victim of identity theft? Because one thing when you've been a victim of identity theft, just going online or getting a copy of your credit report and trying to dispute the information is not enough. Anybody understand why that's not enough? Any? Mainly because when you've been a victim, they've stolen your ID. So they've got your name, they've got your address, they've got your social security number. So when you try to dispute that, what is the creditor going to do? They're going to look and they're going to see your name, address, and social security number. So whenever you've been a victim of identity theft, you're going to have to file a report with the police department and send that directly to the creditor's fraud department. So keep that in mind. If you've ever been a victim of identity theft, just going to the credit reporting agencies and disputing that information is not going to be enough. So what's included in those credit files? Personal identification information, your name, your address, the last 4 digits of your social security number, previous address, current employer, previous employer. How do you think that creditor gets that information? Anybody, anyone? No one?
We give it to them.
You give it to them. How do you give it to them? When you apply for credit. So no other agency provides that information. I've had some people say, well, the Social Security gives it to them, the IRS. Every time you apply for credit, what do you provide them with? Your name, your address, your current employer. So they have that information there on file and stays with your credit report. Also, public record information is going to be on your credit report. So if anyone has ever taken you to court, then you're probably going to have that information on your credit report. If you had filed bankruptcy, that's going to be on the credit report. Had an IRS tax lien, that's going to be on your credit report. Then you have your credit account information section, that section on your credit report that lists all of the accounts that you have, credit accounts that you have. It also will have in that section any outstanding collections. A collection is a third party that is going to collect on a debt that you did not have to pay. That's going to be in that section. Then you have your inquiries. Every time you apply for any type of credit, there's going to be an inquiry made on your credit report. Just know that your credit report will not include your credit score. You can get that free credit report every year from annualcreditreport.com, but it's not going to include your credit score. I think it's all made up. You know, we'll give them the credit report, but we want them to pay for that credit score.
I was going to ask why not. I mean, why don't they tell you what your score is?
Well, the federal government said you have to give a free, credit report, but they did not say it had to be a free credit score. So I think it's just a way for the creditors to make additional money. Okay, any questions on credit report basics?
Places like Credit Karma.
Hold that question. He asked about Credit Karma. We're going to talk about that just a little bit under credit scores. So any other questions just on the basics of the credit? Okay, let's look at the credit scores. I'm on page 3. So what is a credit score? It's just a 3-digit number that says how you pay your bills, your payment history. It represents your payment history. And your credit score determines your eligibility for credit cards, loans, apartment rentals, deposits for utilities and cell phones, auto and homeowners insurance, and even some job positions. It is so important now that we understand what your credit score is. Before, we didn't have to worry about these things. Before, you could go to your neighborhood store or bank, and because they know you, they'll say, I know you. You come in all the time. Yes, I will grant you credit. But now everything is computerized. So how they know you is they know you by your credit score. So it's really important that we start paying more attention to how that credit score affects our ability, to purchase things. So how is this credit score rated? It is on a scale from 300 to 850 points. We're basically talking about the FICO score, and this FICO score is the score that most creditors use in deciding whether or not you would be a good credit risk. So you can see if your score was between 620 and 679, that's fair. If you're 680 to 719, that's good, and anything over 720 is going to be excellent. So you want to strive toward that 720 score, but if you're looking to purchase a home, lenders will even take just a 640 credit score. So let's turn over to the next page. So what's included in the score? Real important. Very first thing they look at is payment history. How well do you pay your bills? Are you a slow pay? Well, when I get around to it, I'll pay that bill. They can wait. They're a large company, They already have a lot of money. They don't need my little money that I'm going to pay them. But they want you, the credit score wants you to pay on time. 35% of your credit score is based if you pay your accounts on time. Second thing, the amounts that you owe on your credit cards, 30% of your credit score. So if you have revolving credit, you have to keep the balances low. Now, this is something that was really strange for me when I first started looking at credit, because in my mind, I thought if I have a lot of credit cards with a lot of balances, then I'm probably going to have good credit. How many people thought that? Anybody thought that? If you have a lot of credit cards and you got a lot of balances and you high balances that were showing that you pay on time, then you're going to have a good credit score. Anybody? I know there's got to be somebody out there. Okay, I got a few hands. But guess what? The credit score rates you on how low you keep the balance. The lower the balance, the better. Because the credit score says if you have high balances, you are a high risk because you don't have any money. So that is the main reason. So if you have a revolving credit card, you want to make sure that you keep the balance low. Something that I just learned a few years ago. So the balance that you want to keep on your credit cards is no more than 20% of the available credit limit. So if you have a $1,000 credit limit, that balance should never be more than $200. The next thing that the credit score looks at is your length of credit history. That's 15% of your credit score. How long have you had credit? So the longer that you have credit, the better. Now, just reviewing credit scores, I tried to talk with the company, FICO, and they wouldn't tell me. But I can tell you, looking at different credit reports, usually if you've had credit for 5 years or longer, it's a plus for you on the credit score. The longer, the better. Types of credit used. The credit score wants to know if you have an auto loan, mortgage loan, revolving, credit accounts, and how you manage those. But I can tell you one thing. If you have a revolving bank credit card, that is going to help you the most. And then if you apply for new credit, counts 10%. So if you go out and apply for a lot of new credit at one time, it's going to hurt you. So just know that the more inquiries that are on your credit report, it's going to hurt your score. Now, when you receive your credit score, everybody's always concentrating just on that number. The number is important, but what you really want to look at is the reasons. They're going to give you about 4 reasons why your score can be higher. So you always want to look at those reasons. And so right here I've got some sample reasons, that you might see. Now, if you've got any type of collections that's going to be on your credit report, the very first thing you're going to always have on there is going to say serious delinquency in public record or collection filed. That's always going to be number 1. So if you see that, don't get too upset. Let's go look at the second one, because the second and the third is going to probably tell you a little bit more that's going to be important to you. So the second one might be the number of accounts with delinquency. So if you looked and you saw that, then you know that you have too many delinquent accounts on your credit report, and you're going to have to work in trying to see if you can settle them and get them removed. Now, in the credit repair class that we have at Dallas County, I have a paralegal from an attorney firm that works with us and tells you the right way to handle those outstanding collections. Because if you handle it the wrong way in settling the account, you might settle an account, and then next thing you know that the balance that you still owed would have been sold to another collection company and you still owe. So in that class we talk about the right way of handling those outstanding collections. So just know, if you see a reason that says the number of accounts with delinquency, you know that you're going to have to work on trying to get some of those delinquencies removed from your credit report. Next thing, months since recent delinquency is too short. So keep in mind that with the credit score, the more recent the delinquency, the worse it hurts your score. So you really have to work on your budget and make sure you know that you have an emergency fund so you're not going to have any type of recent delinquencies. I can tell you we've had people who come in the office for some reason or another, had paid on those accounts on time for the whole year, credit score had come up, and what happened? They missed making a payment, one 30-day late payment, and dropped their score 30 or 40 points. That's just how important paying on time is. Months since most recent delinquency is too short. I just did that one. Proportion of balances to credit limits. And this is the one thing that I have people come in my office and they'll say, Miss Brown, tell me which one of these collections I need to pay off. And I'm looking at the collections, and then all of a sudden I go down and look at their revolving credit, and they have almost maxed out on that credit card. The problem was not the collections, because the older that collection becomes, the less impact it's going to have on your credit score. What they had a problem with were the balances were too high. Remember I said that 30% of your credit score is based on if you have a revolving credit card and you keep the balance low. So one of the things that you can look on your credit report right now, if you have revolving cards, see what that balance is. People who have been to credit repair companies, we see that a lot. They're working with someone trying to get them to dispute everything on their credit report. They just want to dispute. The problem is not disputing information, it's just paying down those revolving credit card balances. And this is one that really bothers me. I mean, just really, really bothers me. Because it says not enough revolving debt experience. Now, I don't know about you, but I cannot stand credit. Credit cards, revolving credit's gotten me in more trouble. The credit score says that you have to have a revolving credit card.